All right, so just waiting for it to connect live stream, and it looks like we are good. So welcome to a brand new segment that we're going to start doing weekly that we refer to as Mortgage Mondays. We have Andrea Burns in, and Andrea is going to talk to us about basically just what to expect in the early stages of a mortgage and some basic information. We're going to run live every Monday at roughly 12:15. Give you a chance during lunch to be able to pop in. If you have questions, you can interact with us live. Or if there are mortgage questions that you would like us to cover, just comment below and we'll make sure that we add them to the program. So thanks, Andrew. Oh, and before I forget, we also are going to talk about stellar rate opportunities. And so at the end, after we go through some of the basics, in about 10 minutes, we're going to touch base on an opportunity for you to be able to get some incredible rates in the market right now. So Andrea, thanks for coming in.
Thanks, Jason. I look forward to doing these Monday segments with you.
Yeah, it should be fun. Just some quick hits helping to educate the public, especially for those that haven't gone through the process or maybe haven't gone through it in a very long time. And so, I guess the first thing, and we'll see it often, we're seeing it in today's market where deals are falling apart because of financing. And the buyers sometimes are puzzled. And it's my opinion that some large percentage of them are falling apart because a buyer will go to a bank and get pre-qualified versus getting a true pre-approval. So if you can give me a second and just sort of explain your differences on a pre-qualification versus pre-approval.
Yeah, absolutely. So, it's huge advantage for a buyer to be able to get a pre-approval versus that pre-qualification that you touched on. So a pre-approval is a formal application process that lenders will review your documents, look at everything, and give you a pre-approval on what they're willing to lend. So it gives you a better idea of what you qualify for now, and so that you're ready down the road to make an offer on a house and be confident with that. So unlike a pre-qualification, which is more of an informal process, you go online, you put in those calculators, kind of your income, you do it kind of by yourself, and then within 60 seconds they pop out what you qualify for. And I mean, there's so many things that are missing out of a pre-qualification that a lot of people don't think about. So it is always best to get a formal pre-approval on anything so that you can go into this market confident in what you're putting an offer in at. So, because we see this market being so hot and it's so competitive right now, you want to be able to make an offer without hesitation, because if, you got to wait a few days to see if you can qualify for it, it's already probably lost at that point. So, pre-approval is a huge thing to have in today's market.
Yeah, it's so true. And truly understand for everybody watching that getting a pre-qualified, just because you go into the bank and the bank have spent 15 minutes with you or 20 minutes with you asking you a few questions, it doesn't mean that you have a pre-approval. So make sure you're asking for a pre-approval letter. This is written documentation saying, yes, you're approved for this much with these certain criteria. And this is really important because most of the time, if you go into a branch, they're going to ask you some questions. They pull up on the screen. They're not mortgage specialists. Typically, they deal with everything from credit cards to bank accounts to loans to mortgages. And they answer a few questions and they say, oh, you should be qualified up to X.
Mm-hmm. And then if anything's missing out of that, like if they don't know all of the criteria, or they, you miss telling them about something that's on your credit report or whatever the case may be, then you go put an offer on a house and, it ends up you're not able to qualify for what you're putting the offer in. So then a lot of people seem to get stung in the end because they didn't do that formal process.
Yeah, and that's exactly it. If they haven't pulled your credit, there is no way that they can guarantee you a pre-approval, right? Mm-hmm. That should just be a standard baseline, because there will be so many details on the credit report that maybe you weren't even aware of that can affect the mortgage. So really important to understand that you're looking for a pre-approval and not just a basic pre-qualification.
Yes.
And so what is a typical timeline to get these pre-approvals done?
Yeah, so we generally like to tell clients that we need about 3 weeks from, the first initial meeting to the final, signing appointments where right before you're getting your financing funded. So, we need the first approval where we're getting the application in, we're getting your documents in, we need some time to get all of your information. And then from there, a lender, depending on which lender we go with, it could take somewhere up to a week to get that approval back. And then in between that time, we also need to account for any external appointments you need. So let's say you need an appraisal or the home inspection, you need to make time to go sign with the lawyer. All those kind of things we need to take into account when we are giving a timeline for a mortgage. So it does take, 2 to 3 weeks. And, generally we like to give a little bit of extra time for anything that comes up in between.
Yeah, that's perfect. So I do like to think about the mortgage process basically in 3 steps. So the first one's the pre-approval. And so like Andrea said, it can take a week for a lender to get back to you and say, yes, we approve. Bear in mind, though, that doesn't include the time it takes you to get the documents together. Yeah. So if you want to be quick and you have all the documents together and you can get it to Andrea in 24 hours, then maybe she can have you that official letter in a week. Mm-hmm. It takes you 3 weeks to get information together, like a job letter, for example, and your lender isn't providing a letter for you, or it's taking time, then be aware it's roughly a week from the time that you get all the documents to Andrea. Yeah. And so really have that timeline. Then the second chunk is after we go and find a home, we need to make sure that it's conditional upon the mortgage financing. I like to describe it as typically, we're not saying at this point, if you have a true pre-approval, it's really not you qualifying for the mortgage. It is more, does the house qualify for the mortgage? That's where Andrea brought up, it's the appraisal, it's the different sets of information regarding the home. They take all the information from the MLS that the realtor has provided to them, they input it, and then are able to do an evaluation from there. So generally, we're saying that can take up to 2 weeks from the time you write the offer to the time conditions are removed. And then the third segment is everything that happens behind the scenes with the lawyer, where the lender and Andrea will go and get the information to the lawyer and make sure they have all the right documents to sign. And then money ends up in their account. And then you buy a house and the seller gets their money. So it's basically in 3 chunks. And so today, if we're just talking about the pre-approval process, that's going to be about a week from the time that you submit all your documents to Andrea.
Yeah.
And now, so what are some of the factors that the lenders are going to typically consider when they're evaluating a mortgage application?
Yeah, so some of the main factors in your application that lenders look at are your income and your employment. They want to look at your debts and expenses that you have, so what kind of debt load you carry. They want to look at your credit score in that report just to see, where it's at. They want to look at what kind of down payment you have if you're making a purchase. And as well, they use what we call the GDS and TDS ratios to look at what you can qualify for. So digging a little bit more into the GDS and TDS, the GDS ratio is what we call our gross debt servicing ratio. So that looks at all your housing costs. So that's your mortgage payment, your property taxes, your heat expenses, and 50% of your condo fees, if applicable, all divided by your gross income. So lenders will give you up to 39% on the GDS ratio to qualify. And then they also do what we call as the TDS, the total debt servicing ratio. So that's all those housing costs I just listed, plus any external debts that you have. So any car loan payments, any credit card payments, those type of things added to your housing costs. And then again, divided by your gross income. So they give up to 44% on that TDS. So those are the 2 main ratios that lenders do focus on with an application and qualifying. They want to see if you can carry that mortgage payment on top of your other payments as well.
Yeah, so if you think about it, think about a third of your income they will allow to be used to pay for the housing. Okay, and then they say about 44%, so under half of your total income can be debt, which also includes everything that you're putting into the house. So if you're thinking about buying a car, don't do it till after you move into the property. The second you change your car loan payments, okay, it changes your total debt service ratio. And so we've seen it. We've seen people go in and buy a brand new truck, and then it comes to closing, and it's like, what do you mean I can't close on the home? Well, it's because your TDS has changed. So it's really important that when we start looking at these ratios, you need to understand there are hard stops. To use round numbers, I say roughly a third of your income can be for your housing costs, your mortgage payment, your taxes, your condo, etc. And then up to 44% of your total income can be for debt. So really important to mention. Now, also, Andrea had mentioned they look at credit score. Be aware that the credit score is important, but at the same time, it's not the end all and be all. There are alternative lenders, B lenders, private money, that sort of thing that may be available that if you have a credit score, say in the 500s, you may think, okay, you know what, I have no chance of getting a mortgage. Well, that's not true. Generally, they'll look at other circumstances, what brought you there. They're also going to look at things like how much down do you have? The more down you have, the less risk they have. So the more likely they're going to be interested in proceeding. So there's a lot of factors involved with that. So Andrea, I'm assuming you don't just want the slam dunk mortgages with people of 700 credit scores and 50% down. You're prepared to chat with anybody about.
Yeah, so the credit scores, again, they do look at that quite heavily, but if you're below what the threshold is for, the A lending, the best rates, it's not unattainable to get a mortgage. So like you said, if you are below those thresholds, we still have options, which is nice to come to a broker as well, because we deal with, those A lenders, but we also deal with the B and the private. So, we are human. We get into, mistakes. We have problems with credit here and there, but that doesn't mean that you can attain a mortgage. So, it's always best to come, ask the questions, see where you're at, see, even if it's in a short term, we, have to get you in with a private lender because your credit's bruised. But, in a few years, we can get your credit back up to where it needs to be and then, get back to those better rates. So the only difference is you're going to pay a little bit higher with the interest rates when you're into that B lending or the private lending. But yeah, like I said, we still deal with lots of clients that have bruised credit. And
also be aware that the housing prices are going up, rent is going up. So you may look at it and go, oh my God, I don't want to pay that higher interest rate, and whatever it is. But until you look at it from a perspective of a rent versus buy and a cost analysis, you actually could be higher, or you could be better off by getting your mortgage today, paying a little bit higher of an interest rate, having the house appreciate. So you're gaining the equity. All that money's ending up in your pocket versus somebody else. You're also not dealing with the chaos of the landlord. They're telling you what you can paint, what you can't paint, what kind of parties you can have, who you can have over, any of that. Can you have a pet, any of that? And you have greater control of your life. And sometimes if we look at the numbers, you actually may be farther ahead getting a B lender and a little higher rate than if you were to continue to rent and have the landlord jack your rent by 10% every year.
Yeah, absolutely. What we like to talk with clients about is their long-term goals. So it's not necessarily, we don't want to put you in B lender or private lending, for the entirety of your mortgage. But if that's the option that we can get you right now to get you into your home, and like you said, get you, started building equity, then that's what we do for the short term. And then we can refinance, we can switch it afterwards when, you're in a bit of a better position overall to qualify at more of the A lending side. So
yeah, and being a realtor, I'm biased towards mortgage brokers because I believe they have more product, they have more education, they're a specialist in what they do. And so rather than just go into a bank and a branch and they say, no, absolutely not, you're not going to qualify, sorry. What Andrea may be able to do is say, you know what, great news, you qualify, we got a couple options for you. They're not A lenders, but let's set up a strategy so we can sit down and plan every year, maybe meet once a year, and we'll see how you're doing and how can we get you into that A lender and what are some little tweaks that we can do so that in 5 years' time, you're in a completely different situation and you've gained the equity of the property for the last 5 years. Something really important to see. We've seen crazy equity increases in home values. So, a home that was worth $350 a year later is worth $385.
Mm-hmm.
It's more fun to get that $35,000 in your pocket than some other buyers. And there's going to be a really high interest that all of a sudden you're paying $35,000 in a year in interest. That's $3,000 a month. Yeah. Like that would be insane interest. Mm-hmm. And so when we break it down and just look at it logically rather than an emotional stance, sometimes there are phenomenal opportunities to be able to take action today, get in, work with Andrea, set these goals and meet on a regular basis.
Yeah, absolutely. It's never, when people kind of ask, like, how early should I be talking about preparing myself to get a mortgage, or any of those questions coming up for renewal, or wanting to look into your options to even refinance? I mean, it's never too early. Our pre-approvals last for 120 days. So you do have that 4-month period. You can get it early, but even if you didn't want to get into a pre-approval just yet, even coming in and educating yourself on what your mortgage will look like, or what kind of options are available to you, and see where you're at today versus where you want to be when you are ready to buy, that's huge. So it's never too early to come in and talk about it. And I like to tell clients, like, it doesn't hurt to book a meeting. You're not paying for anything. You come in, we can talk about it. I can educate you on some of those things, and then you can feel comfortable going into a mortgage down the road.
No, and that makes sense. And so what are the first steps someone should take when they're considering applying for a mortgage?
Yeah, so the first steps is just getting your documentation in order, knowing what you kind of want, setting your goals for the long term. Talking to a mortgage broker like myself, book that meeting. Just come in. We can go over, kind of a skeleton application, see where you're at right now, like I said. And, if it's not quite where you want to be, we can talk about how to get there. So what can you do to, bring your credit up a little bit? What kind of things make up your credit score that, maybe over the next year you can work on, fixing or increasing your credit score to get to that place where, now I'm ready to buy. I feel comfortable. I can manage my debt. I can, get and handle those mortgage payments. So, book a meeting, sit down. It's a great opportunity to just learn more about what's available to borrowers out there.
Perfect. So what I'm going to do, Andrea, is I'm going to put all your contact information down in the description so they can reach out to you. Feel free to reach out to Andrea and say, hey, I just want to have a coffee and have a chat, right?
Yeah.
Have a discussion, evaluate the situation. If you don't have all your documents together, it's a perfect time. Andrea's going to have a checklist that she'll be able to give to you that you're able to walk away with and say, here are the 13 things that I have to put together. And it kind of will just help start that ball rolling and really have you understand what your options are and how soon that may be possible. Yeah. Now, Andrea, we did put a little teaser at the beginning about some incredible rates going on. And so what is an example of what may be available right now?
Yeah, so we work with tons of lenders, and right now we're seeing quite a few rate promos that are quick close. So, if you come in, you find a house, you're closing within 60 days, we have much better interest rates to offer for those quick close. They come and go, but we do have quite a few options right now. So if you want to reach out and ask some questions, if you feel like you're in a position to buy in the next couple months, then please, let's sit down, let's talk about it and get your application going.
Yeah, so if you're looking for a close, well, they refer to them as quick close rates. Mm-hmm. And like Andrea said, within 60 days, there is some real power on your side to be able to negotiate. What happens is the lender has a bank of money. They have a whole pool of money. And if that doesn't get out by the end of the month, then it's not making them any money. So it's costing them money to have it sit there. So all of a sudden they say, hold it, we're panicking a little. We have a whole bunch of money that we have to get out. So we're going to give an incentive, a great rate to get this money out the door within 60 days. And their misfortune could be your fortune. Could be a real opportunity. So once again, if you're looking for a great rate and you're closing in the next 60 days, or you want to close in the next 60 days, reach out to Andrea and she can give you more specifics on the rate. They change day to day and lender to lender. It depends on how hungry each lender is based on what's out there. And so, I strongly recommend find out what your options are. So thanks again, Andrea. Thanks again, everybody, for coming in. You're going to see every week, roughly 15 minutes. If you have any questions, go ahead and comment, and we'll make sure that we add those into the chats in the future.
Great. Thank you, Jason.
Thanks. Have a great week.
You too.